Welcome back to Personal Finance Explained. The topic I wanted to cover on today's episode is banks, really an introduction to banks. And if you're asking, well, why banks? Banks because they're going to be a really important part of your financial future going forward. So why do people put money in banks to begin with? There's a couple reasons for that. One, it's viewed as a safe place to put money. So imagine if you just stuffed cash under your mattress. It would be pretty accessible for anyone to get in there, take the cash, and start spending it. But with a bank, it's a bit different. Banks actually have insurance, they have cybersecurity, they have physical security, and a number of other things that make your cash safe. Another reason people use banks is to get paid and also make payments. So if you're employed, you have a job, oftentimes what the employer will do is direct deposit any salary or wages that you earn into your bank account. So they're basically paying you directly into your bank account, which is super convenient for you. In terms of paying for things, with a bank, you don't have to hold on to cash. Banks will allow you to use debit cards, credit cards, and checks, and they'll facilitate those payments, which is a much safer way to pay for things. Another reason people use banks is access to credit cards and loans. So let's say you, at some point in your life, you want to buy a house or buy a car or start a business. More often than not, for those types of big purchases, you're going to need to get a loan, and banks can provide that for you. Another reason people use banks is that banks will actually pay you to hold on to your money. And if you're asking, well, why would a bank pay me to hold on to my money? Effectively, to try and solidify this concept, what banks do is they hold on to cash from a bunch of individuals and businesses, and they aggregate all of that cash. And the reality is that not everyone is going to need that cash right away. So what do? Instead, they hold on to enough reserves to make sure that they can pay you the cash when you ask for it, but with any excess funds, they invest it. And your next question is probably, well, what do they invest in? They invest in many things, but primarily it's mortgages. So people looking to buy a home, they will lend out money for that purpose. Car loans, so people looking to buy a car, they'll lend money on. Business loans, so people looking to grow their business, and even government debt. So putting a couple of these pieces together, you might be asking, or it might be obvious at this point, how banks make money. But effectively, they make money in one of two ways. The first way is they earn a spread on the difference of what they pay you to hold on to your cash and what they earn on their investments. So let's just say that you deposit $100,000 at a bank. And let's just say the bank says, we'll pay you 1% interest to hold on to that money. So in a year, at $100,000 times the 1%, you'll get $1,000 from the bank. But on the other hand, the bank will take that $100,000 and they will invest it. And let's say they lend money on somebody wanting to buy a house, and they lend that money at 4%. So $100,000 times 4%, they're earning $4,000. And so the difference between that $4,000 that they're earning and the $1,000 that they pay you is $3,000 of profit for the bank. The second thing banks make money on is fees, and I won't get into too much detail here, but some of the fees might include things like ATM fees, late payment fees, and overdraft fees. So now that you know that a bank isn't just holding on to your money in cash in their bank vault or whatever it may be, and they're actually taking some of your money and investing it in other things, your next question is probably, how do I know that my money is safe at a bank? And there's really 3 or 4 reasons. Again, not an exhaustive list, but I'll cover some of the highlights. So the first reason is government insurance. So there's a group called the FDIC, or Federal Deposit Insurance Corporation, that guarantees your deposits at a bank up to $250,000. So it's $250,000 per person per bank. So what that means is even if the bank fails, you will be able to get back your up to $250,000. Another reason is government regulations. So banks are heavily regulated to prevent against fraud and any financial misuse. Another reason that your money would be safe is banks have a lot of cybersecurity. So they have advanced systems to protect against any hackers and cybercrime. Banks also have physical security, so they have vaults, and they even sometimes have personnel at the bank to make sure that people don't just come in and take the money that's in there. So now you know how a bank works, how they make money, and why people trust them with their deposits. If you found this video helpful, please make sure to like and subscribe, and until then, we'll see you in the next video.